Hey, good morning, everybody. Today is Tuesday, January 27th, 2015. My name is Cliff Backus, and I am the Chief Market Strategist for Push Button Stock Trading. And this is your daily video market review. Markets clawed their way to a reasonable finish yesterday in light of the weather that was threatening most of the country, and particularly Wall Street. Both the NASDAQ and the S&P closed higher on heavier trade, giving us accumulation days on both indexes. Let's take a quick look at the NASDAQ here. NASDAQ yesterday was up 13.88 points, or 0.29%, a little bit more than 1/4%. NASDAQ closed right at the top of its daily trading range. Trading volume was heavier than the prior day, which gives us an accumulation day. A higher close on higher volume is an indication of institutional support. Although the trading volume did come in below the average daily, which doesn't show extreme institutional support, the trading volume was a little bit higher. All in all, yesterday was a pretty good day for the NASDAQ. Right now, as we discussed over the weekend, the NASDAQ is in a short-term sideways pattern, a neutral trend in the NASDAQ. We have, if we connect our bottoms, this short-term uptrend. If we connect the tops, we have this short-term downtrend, which gives us a neutral trend in the market. I'm going to take these trend lines off for now because I don't really think they're that important. Right now, the NASDAQ is bracketed by minor support in the 4767 area, major 4567 area, I'm sorry. Major support in the 45-47 area. The difference being, if we were to break down below this area, it wouldn't necessarily put us into a short-term downtrend. But if we were to break down below this prior low, that would give us a higher high, higher low, marginally higher high, higher low, then a lower high, and a lower low. That would put us into a short-term downtrend. Right now we're on a margin signal on the NASDAQ. What that means is that aggressive traders can leverage their portfolios up with margin. Conservative traders can begin to work back toward fully invested. We should be shedding weak positions in our portfolios and trying to replace them with stronger positions. Let's go over and take a quick look at the S&P 500. S&P 500 yesterday was up 5.27 points, just a little bit better than 1/4%. S&P closed right smack at the top of its daily trading range after spending most of the day in negative territory. It was an impressive day for the S&P. It scratched and clawed its way back and finally in the end closed at the very top of its daily trading range. Trading volume was about average, a little bit above the prior day, which gives us an accumulation day. S&P 500 is in a confirmed uptrend. We've been in a confirmed uptrend since January 8th. Immediately following the confirmed uptrend, we had 3 real quick distribution days, or days of institutional selling. That generally is fairly bearish, but I think that this margin signal on our 1 to 6 month timing model mitigates this distribution somewhat. Right now, the S&P 500 is bracketed by minor support in the 1992 area and support in the 1972 area. Break below this area puts us in a short-term downtrend. We have resistance in the 2094 area. A break above that area puts us in a short-term uptrend. Now let's take a quick look at our MACD histogram. The bar at the very right edge of our MACD histogram right now is above the 0 line, which is bullish. We also are trending higher, which is also bullish. That gives us an immediate bullish bias on the S&P 500. Before we go, I want to take a quick look at a stock that we bought for our aggressive traders. Mobileye NV is an Israeli-based developer of software and related technologies for camera-based advanced driver assistance systems. They make the collision avoidance systems that are being put into cars recently. Earnings over the past 4 quarters have slowed a little bit with Mobileye, but earnings estimates for 2015 are significantly higher than 2014. We're looking for a 95% increase in earnings for the next year. Mobileye has broken out of this intermediate term downtrend. I would have preferred to have seen a little bit better trading volume. We bought yesterday, put our stop right here at the trend line. If we were to break back below this trend line, we would go ahead and get out of this position. If you want to talk about Mobileye, the markets, or any of our trading strategies, please feel free to give me a call. Drop me an email, or if you'd prefer, make an appointment, come by the office, see what we're up to. We can also set up a Skype session if you're out of the area. See my contact information on the home page. If you've not already done so, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. Finally, take a quick look at our disclaimer video, which is posted below this one. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I'll see you again tomorrow.